All right, let's get into it. Today, we're basically putting Rivian Automotive up on the lift for a full diagnostic. We've got this really detailed technical analysis report dated November 12, 2025, and we're going to decode exactly what it says about the stock's health and maybe, just maybe, where it's headed next.
Okay, so let's dive right in. And instead of doing a slow build-up, let's just jump straight to the end. Let's see the final summary, the mechanics' overall verdict on Rivian's condition right from this report.
And here it is. The verdict is in. The report gives Rivian a general technical score of about 68%. Now that puts it firmly in the bullish category. So yeah, that's a pretty strong green light, suggesting the overall technical picture looks pretty good.
But like any good inspection, it's never just a simple pass or fail, right? The report highlights this really fascinating tension. On one hand, you've got this incredibly strong upward trend, but on the other, you have multiple warning lights flashing on the dashboard, basically saying the engine is running way too hot. So the big question is it ready for the open road or is it due for a cool down? That's really the core conflict we're going to dig into.
All right, so first things first, let's pop the hood and take a look at the engine itself. And in stock terms, that's the trend. This is what tells us all about the underlying power and, the direction the stock is actually moving in.
Now, to measure that power, analysts use this really key tool called moving averages, or MAs. Just think of it like this. You're checking to see if the car is consistently accelerating. If the current price is way above its recent average prices, that's a fantastic sign that it's in a really strong uptrend.
And when it comes to Rivian, wow, its performance here is seriously impressive. The current price isn't just kind of creeping above its moving averages, it is blowing past them. Just look at the long-term view. It's over 36% higher than its 200-day average. That right there confirms a very, very powerful and sustained uptrend pretty much across the board.
So here's the really crucial point. This isn't just some sudden burst of speed out of nowhere. The report makes it clear that for months, this stock was basically just idling, stuck in that $12 to $14 range, and then, boom, it broke out, and decisively, gaining over 45% from its recent lows. That is a significant shift in performance.
Okay, so we've checked the engine power. Now let's glance over at the speedometer and see just how fast this thing is moving right now. This is all about momentum, the speed of the price change. The question is it just cruising along, or is the pedal to the metal?
The main gauge for this is something called the Relative Strength Index, or RSI for short. The best way to think about it is like the car's tachometer, the RPM gauge. When that needle gets too high, specifically over a reading of 70, it's like it's hitting the red line, and that suggests the engine might be overworking itself and just can't sustain that crazy pace for much longer.
And yep, this is exactly where those warning lights start to flash. Rivian's RSI is reading 74.80. That is well into that overbought red zone we were just talking about. It's a classic textbook signal that this powerful rally might just be getting overheated and could be due for a pause or maybe even a pullback.
And listen, it's not just one warning light on the dash. The report points out that a bunch of other momentum indicators, things with names like the stochastic and the CCI, they're all flashing overbought. It's like a whole chorus of signals, all screaming the same thing. While the momentum is definitely strong, it might have just gone too far, too fast.
Okay, so we've checked the engine, we've checked the speed. Now let's take a look at the road conditions ahead. How bumpy is this ride actually going to be? This is where we get into the stock's volatility and risk.
So a really key metric for this is called beta. And beta basically just tells you how a stock's price tends to move compared to the overall market. So a beta of 1 means it pretty much moves in line with the market. But a beta above 1, well, that means it's more volatile. It tends to have much bigger swings, both on the way up and on the way down.
And as you can see here, Rivian's beta is 1.34. So what does that mean? It means it's about 34% more volatile than the market as a whole. So yeah, you should definitely expect bigger swings in both directions. The report calls the overall risk moderate, but it really emphasizes that this ride is going to have more bumps than your average stock. And frankly, that's pretty typical for a high-growth name in the EV space.
All right, the inspection is pretty much complete. We've looked under the hood at the trend, we've checked the speedometer for momentum, and we've assessed the road conditions with risk. So, what's the final advice? Well, the report lays out 2 very clear potential paths for the journey ahead.
This quote from the report's conclusion just sums it all up perfectly.
The engine is powerful, the car's moving fast, and it's going in the right direction, but the dashboard is just lit up with warning signs, basically telling the driver, hey, be careful, you're overheating. So it all comes down to these two scenarios to watch, kind of like a fork in the road. The bullish scenario, the stock just powers right through that key resistance level at 1885. If that happens, it signals the rally has more room to run. The bearish scenario, it fails to break through and instead pulls back to find some support down around 1691, letting that engine finally cool off a bit.
So what's the final recommendation here? Well, and I gotta say, this is purely the report's technical take, not investment advice, right? But it suggests being bullish, but on a pullback. What does that mean? In other words, it really likes the strong underlying trend, but it's suggesting that maybe waiting for the price to dip back down to that 1691 support level might be the more patient play.
And all of this leaves us with one final and I think really crucial question. The report paints this super clear picture of a stock with incredible power, but also with really obvious signs of being overextended. It just forces you to ask, for a company like Rivian, which is in a sector we know is volatile, where exactly do you draw the line between powerful, healthy momentum and a risky, unsustainable sprint? I think figuring that out, that's the key takeaway from this entire analysis.